Welcome everybody to the 40 Finance channel. My name's Jeff Beers, and today I'm looking at 5 consumer trend stocks for 2020 that you might want to keep your eye on. These are sort of new innovations or coming and going trends that the consumer is on. I definitely think there's some opportunity to make some money. Of course, you have to be smart and choose the right stocks and make the best play for yourself. But this gives an overview of 5 consumer trend stocks that I think have promise. First on our list today is a company called Yeti, Y-E-T-I, ticker symbol Y-E-T-I. And Yeti, if you're not aware, makes premium coolers, beverage coolers, and other things like water bottles, cup holders, stuff like that. And they've basically taken an industry that's, been known for Walmart type goods with igloo coolers and things that are priced, say under $20 or so. And they've turned it into this new industry of premium coolers and beverage containers where a hard-sided Yeti cooler that you would normally see at Walmart for, less than $30, they're selling these things for hundreds of dollars. And their sort of mantra is that the Yeti coolers are unbreakable, they're better storage, all these things. They have a premium selling point here, and customers are eating it up. I mean, these things are everywhere, absolutely everywhere, especially with camping stores, outdoor stores, things like that. Yeti is very popular, and at least right now, the stock looks like it's got some promise. This chart over here is a 1-year chart. It's definitely had some ups and downs, but right now we're sitting at a price of $31.97. You got a PE ratio of 38.7 with a forward PE of 25.77. And sales have been really good for Yeti. The question, of course, is can this trend continue? Will people continue to pay premium prices for coolers? How will things go when the economy potentially takes a dip? Will their sales continue? Frankly, with the popularity of outdoor recreation and mountain climbing, camping, all those things, I think that they have a pretty solid future. Checking out the Tip Ranks dashboard for the top performing analysts to see what they think about Yeti. And over the next 12 months, we got an average price target of $42.75. That is a 33% upside, and you got a high bar of $47 from one analyst and a low of $38. So things are looking pretty good for Yeti from an analyst standpoint. I think the question as you do your research is, do you think this trend can continue? Next on the board today is a company called CarMax. And if you live in a medium to large city, you've undoubtedly seen CarMax locations. These are car dealerships where you can go and literally get cash for your car today or sell your car today. They'll come out and do an appraisal, and they give you approximately like the wholesale price for your vehicle, with the caveat though that you do get paid on site and you can walk away having sold your car, no questions asked. And on the flip side of that, CarMax actually is turning into a great place to buy a car. So they kind of taken out the sales process and a lot of those things that people hate about buying cars. They get their cars at a wholesale level and they mark them up for a profit, and then they're dealing more on volume here, right? So they're dealing on the ability to attract good cars to their lot, inspect them before they have them, and turn around and sell them to folks. So CarMax is growing, and it is disrupting the car dealership model, at least on the used cars, and I think that there's some opportunity here to continue to grow. Looking at the chart for CarMax, you got a price today of $92.27. The PE ratio is only 17.9, so that's pretty good considering they're essentially like a retail operation. and the forward P drops ever so slightly to 15.46. And the 1-year chart has shown a lot of growth. So there's definitely something to watch here. Maybe try to pick up some CarMax if you're interested in this model, maybe on the next dip or something, just to get in a little bit. But the world of buying cars is certainly changing. We see that with Tesla's sort of online delivery service, and I think more and more folks are going to be looking at a different way to buy a car as opposed to going directly to the dealer and sitting through hours of negotiations. CarMax has some online capabilities as well, so you could conceivably buy and sell your car in the same trip without hardly talking to anybody, and this seems to be the preferred experience for most people who dread going through car buying. All right, on the tip rank side of the coin, we have a average price target of $108. This is from 6 analysts. The average is the 108. You have a high analyst of 118 and a low of 90. So these top performing analysts, most of them, six buy signals there, are saying, hey, there's something here. We see CarMax as something to grow. And I think, well, at least from the PE ratio standpoint, you're looking at a company that's at least generating profits, and it's done so over the past year fairly effectively. So that's one to research for you, CarMax. Okay, next on the board is SmileDirectClub. SmileDirectClub. This is one of the makers, similar to Align Technologies, that makes those mouth guard-esque braces that you can order online after you have a consultation to figure out the best way to fit your teeth. And I think one of the reasons I like SmileDirectClub right now is I got 2 kids going through braces, the traditional ones, and I mean it is unbelievable as far as the expenses. So literally thousands of dollars. I kind of pushed internally in our house for this, but Mom wanted to stay with the tried and true method, which, you know, it's fine. I backed off a little bit. But I think SmileDirectClub, Align Technologies, you know, this is a consumer trend that if they can prove case after case over the next couple years, you know, I could see this becoming the thing. It's certainly a lot easier. It's certainly more preferred, I can tell you, from a young person's standpoint. My kids would much prefer to have an invisible mouth guard as opposed to the old train tracks braces that we have of yesteryear. So SmileDirect has some opportunity. Now there is a catch with SmileDirectClub though, and that is it is a relatively new stock. Okay, my research shows that it debuted somewhere in July of 2019. Not a lot of history, not a lot of profits. As a matter of fact, we got a 0 on the PE ratio, and forward PE isn't showing profits either. So there's definitely some risk there. On the bright side, you got a sticker price of $12.09 per share, which is relatively affordable. So when I look at things like that, I say to myself, hey, you know, should you just buy 25 shares at this price, sock them away, forget about them, so to speak, for 3 to 5 years and see if this trend pans out? If so, you could make a lot of money. Of course, there's that risk when you haven't seen profits that the company could fold, right? So there's a lot of ways this could go, but at least the early signs show that these different types of braces are very popular. Looking at the Tip Ranks dashboard for the next 12 months, we have an average price target of $18.83. That is with 6 analysts with the buy rating and 1 with the hold. You got a high price target of $31. Of course, the average is 18 and the low is 7. So a little bit ebb and flow there. I think the bigger thing here is to just, you know, dig into your research on both Align Technologies, which is a much more established company. I believe, though, Align has some of their patents have expired, which has opened the door for competitors like SmileDirect to compete more freely in the marketplace. That's something that you will have to research on your own, but if it's true and if you like the way that SmileDirect is talking about their distribution model within their earnings reports, then hey, this might be worth a gander, at least for a small portion of your stock portfolio. All right, next on the list today is Funko. And Funko is probably a company not too many people have heard of, but if you've seen those bobblehead dolls with the big heads, I'll put an image on here in a second, but if you see a Funko doll, they're at Targets, Walmarts, pretty much everywhere. So these little, like, let's call them 5-inch bobblehead type dolls that they form in the personalities of every movie star, comic book hero, television show character. This thing has absolutely exploded. Funko is literally releasing, dozens of new characters every month. They have a collector's following. They have a pop culture following. It's just an amazing story. With that though, it's right in the thick of what I would call a trend stock, right? So Funko is doing a great job right now. How long can the run continue? What is the competition? I mean, we're essentially talking about toy and memorabilia here, so it's really hard to say. They've got the magic formula right now as far as demand goes. Can they keep it up? That sort of remains to be seen. From a stock perspective, you got a price of $15.86. The PE ratio right now is 20.98. And looking for the forward PE ratio, in my research, I could not find anyone who put a target on it yet. Funko does show profits over the last couple years, so I'm not sure why that forward PE didn't show up for me. However, it's something to look into. They could be anticipating capital spend or something that would affect profits this year. But nonetheless, definitely do your homework on the financials. But from a trend standpoint and a sales standpoint, Funko's doing really good right now. All right, for the tip ranks analysts, we have 3 analysts on this one, 2 buys, 1 hold. And what we're seeing here is the average target is $26. Remember, we're currently about $19, $18.83. You got a high of 35, an average of 26, and the low ball comes in right at 18. So the analysts covering Funko stock do see some opportunity here. I do as well. I just think that this is going to be one, essentially since it's a toy and a fad, that you're really going to have to stay on it every day and just make sure that Funko continues to deliver. So if you want to get in and play this trend, it's going to be one that you have to be ready to bail before things go under. All right, last one we got today is Lululemon. Lululemon, which is a big manufacturer and retailer of sort of high-end yoga and athletic apparel for women mostly. And with Lululemon, I kind of hesitated to put them on this list because their stock is really high right now. And in my opinion, it's kind of expensive. But I will tell you this, from a person who has 2 females in their family household, this stuff is like wildfire, all over our particular neck of the woods. Lululemon apparel is everywhere as far as the eye can see. The only thing I don't like about Lululemon right now is just the stock price. I can very clearly see that, females, athletic females in the, anywhere from 10 years old, because they actually have a girls line too, up into the mid 40s as far as active females, they are interested in the Lululemon brand and they are purchasing large quantities of this apparel. So from a stock perspective, you're at 244 right now. The PE ratio, again, very high, 56.82. The forward PE does drop down to 40.65, at least projected for the next 12 months. The thing that is the risk here, I don't think it's the product and I don't think it's the longevity, it's just where you can get in at. I think that you, at least in my opinion, if you're going to buy Lulu, I would wait till the next dip because the stock market's so hot right now. I personally would try to get in under 225 a share, bring that PE ratio down, and then you're going to have to hold this thing for 2 to 4 years to make a good return on it. And in that time, you're just going to have to hope that Lulu continues to absolutely crush it as far as their trend, which is athletic apparel for females. Assuming they can continue to deliver what the female is looking for, there really is a lot of bright skies in the future for Lulu. Okay, on the tip rank side of things, analysts are basically saying kind of what I'm saying, in the sense of, from an average perspective, they have a target of 252. That's a 3% upside. That's on 13 buys, 4 holds, and no sells. 275 was the high target price, so not a huge upside there at 275, coming off the 244 that we're at today. And I think that that just sort of testifies like, hey, this stock's run up a lot lately, and it's not to say that the company isn't good, and it's not to say that profits are in danger by any stretch of the imagination. I think the best thing, though, to do would to just keep this one on your radar, look for a buying opportunity. We're coming off of Q4, right, which is Christmas holiday sales. Of course, things are going to be good. Let's see what happens to that Lulu price after like a Q1, maybe when the fervor of holiday sales are over. See if they might take a ding or just barely come into earnings, catch a dip there, and if you believe in them for the future, that might be the opportunity to buy. All right, so those are 5 consumer trend stocks for 2020. Let me know what you think in the comments. As always, please like this video, share it with your friends. It helps out a lot. Really appreciate everybody watching today, and I'll see you on the next video.